So to begin with, I think to just define what we mean by regulatory sandbox, it's basically a framework where a regulator allows a fintech or just a startup within the tech sector to conduct live experiments in a controlled environment under a regulator's supervision. In simple language, what happens is that someone has come up with a concept, and now what happens is that you're not sure about the regulation of this concept yet, as is especially within the tech sector. So it's a new thing, and you'd like to see which is the best way to regulate it. Welcome to the Africa Asia discussion today. We are discussing about regulatory sandboxes and how they can be used within Africa. So the topic is regulatory sandboxes for digital businesses in Africa. So we have as our panelists Chido Chashe and Albert, who will introduce themselves shortly. But if I may introduce Africa Asia, we are a platform where we have conversations that will help build Africa and conversations about Africa business, Africa digital, trade, and basically just what issues arise often in Africa. And we have many discussions. We have a podcast called The Africa We Want. And on a weekly basis, we have a discussion like this, which you could tune in, and you could also be a panelist and share your thoughts. So for today, I will invite Tido to go first and introduce herself. Then Albert, you can introduce yourself, and then we'll get into the discussion. Thank you.
Thank you so much, Christine. I hope it's okay that my camera is off. So my name is Chido Chashe Ngube, or Chido Chashe Dipulit Ngube. I am a lawyer from Zimbabwe, but I'm currently based in South Africa. I also do a lot of research on international trade, financial services, and especially the digital economy. It's these are topics that are very close to my heart. Yeah. Thank you, Christine.
Okay. Thank you, Chido. Albert, if you could introduce yourself, please.
Thank you so much, Christine. My name is Albert Puja, but again, you can simply just call me Puja or Albert. Either of the names go. I'm a lawyer, also a bit in the academia now, yes. And my research interest or focus lately has been on the interrelation between financial services regulation and then fintech regulation. So those are like the areas that I've been doing a bit of research around. Promises to be a very exciting discussion, and let's see how it goes. Thank you, Christine.
Thank you, Pooja. Thank you, Chido. And I think it's interesting to note that our aim of having a conversation across Africa is really taking shape here, because Chido is based in South Africa. She's from Zimbabwe. Pooja is based in South Africa, but is from Nigeria. I'm Kenyan, based in Kenya. So it's going to be quite an interesting discussion. So to begin with, I think to just define what we mean by regulatory sandbox, it's basically a framework where a regulator allows a fintech or just a startup within the tech sector to conduct live experiments in a controlled environment under a regulator's supervision. In simple language, what happens is that someone has come up with a concept, and now what happens is that you're not sure about the regulation of this concept yet, as is especially within the tech sector. So it's a new thing, and you'd like to see which is the best way to regulate it. So for instance, if it's let's say if it's a financial product, right? Most countries will have prudential guidelines which are issued by the central bank or the reserve bank. And now what happens is that those guidelines tend not to be very focused on the tech side. So now what you do is that you allow the tech company or the startup to just do a bit of testing before they go live, before the regulations go live. Of course, it's under the supervision of the regulator. So we will be hearing more from the panelists who can add more to that or amend what I just said. So I'll start with Pooja. If you could basically just highlight how regulatory sandboxes work, and you can highlight examples where regulatory sandboxes are being used, whether globally, there are countries which have done that a lot. Also within Africa, if you're aware of any African regulators who are using sandboxes. So, Pooja?
Thank you so much, Christine. I think you've already given the background or framework that would actually guide our conversation today. So the explanation is spot on. I have nothing to add or remove. But I think what I'll do is to now bring in financial services regulation into the picture so that we'll have a very good understanding of what regulatory sandboxes are and what purpose or objective they aim to achieve. So I think in the last discussion we had, I tried to speak to the fact that when we're speaking about digital services or fintech, we have those discussions in the context of financial services. And the best way to understand financial services is to look at the sub-segments or sectors that fall under the financial services industry. So you have the banking, you have insurance, you have pension, and then you also have securities or the capital market. So those are the sub-segments of the financial industry. So more or less, right, activities with respect to fintech would have an impact in any of these four sub-segments. So what that then tells you is that for purposes of regulatory sandboxes, right, you're trying to test a product that would operate in the financial services industry. And again, just so it would seem a bit controversial, but it would be nice to actually mention this. So in terms of the concept of financial services regulation, there are objectives with which, will I say, financial regulators work with. And unfortunately, innovation, right, is not one of the objectives of financial regulation. And that is why in some instances, you'd see financial regulators prohibiting certain fintech activities. Why is that? So the core objectives of financial services regulation are as follows, right? To protect consumers, to ensure that there is no malpractice in the market, like again, anti-money laundering issues, counter financing, financing of terrorism and what have you. And then they also want to ensure that there is financial stability. They want to ensure that the market is efficient. So those are the core objectives of financial service regulation. The financial regulator is not an IT expert. He's not so much into information and communication technology. So what then that means is that most times, right, if an innovative solution comes up, he's not so concerned about promoting innovation. He's more concerned about protecting the market, the financial market, to ensure that the market is stable. And that is why it would seem as though in some instances, regulators, financial regulators specifically, are actually anti-innovation, but that is not the case. They have a playbook, they have objectives with which they work, and those objectives do not revolve around innovation. As funny as it sounds, financial inclusion is more of an objective of financial regulation than actually innovation. So regulatory sandboxes have come up as a compromise or a middle ground to ensure that while the regulator is able to still stick to its core objective of consumer protection, market efficiency, avoidance of malpractices and all of that, at the same time, the regulator also has a disposition to be friendly to innovation. So, but again, you cannot regulate what you don't understand or what you don't know. And on that premise, there is now a need, so to say, for the financial regulator to have an environment where they can understand the product before they can now issue evidence-based or informed-based regulation for that product. So for fintech innovations that have come up, what then typically happens is there are different ways that regulators approach them. So one is to prohibit them, which is what we hate the most, right? Another approach is to actually use the dog test. The dog test is same activity, same rule. What does that simply mean? So the dog test says that if it swims like a duck, it quacks like a duck, and then it also looks like a dog, then it is definitely a duck. So you see instances where some fintech products come up, right? And then the regulator is not issuing a specific regulation for that activity because you already have that activity being covered under the extant framework. So that's another approach. Another approach is to issue specific regulations to cover that product. And then lastly, we now have like the test and learn, which is where regulatory sandboxes come into. So that's like an overview of how, let's say, the issue of regulatory sandboxes have come about and what they're all about. So in terms of jurisdictions that have actually had frameworks for regulatory sandboxes, so in terms of the historicals to it, it is credited to the United Kingdom. I think sometime in 2014, That's when the United Kingdom, the Financial Conduct Authority of the United Kingdom, that's when they actually came up or launched their regulatory sandbox. But I think since our focus is on Africa, let's drill it down to Africa. So again, will I say the literature is not very, very settled, but it will seem as though the first country in Africa that has actually launched or adopted a regulatory sandbox is Sierra Leone. And that is traced to sometime in 2018. But again, other countries that follow suit, the likes of Mauritius, Rwanda, and then notably some of the participants here, we also have our countries having regulatory sandboxes. Kenya did theirs in 2019, and then Nigeria recently released hers in 2021. So that's more or less like an overview of, but so far, I think more than 30 countries worldwide. But in Africa, the number is not so much. So I think when we go deep into the conversation, we'll now start seeing issues as to who is issuing these regulatory sandboxes. And really, the person issuing them, does the person have the competence to be able to actually conduct the test? Thank you so much, Christine.
Pooja, those are very good comments you make, and especially when you bring in that you need to understand what the idea is about, what the startup is about for you to regulate it effectively. So, Chido, if I may come to you and ask, so why is, based on of what Pooja said, yeah, why is the using of sandboxes important for Africa? And also, how can they help Africa in growing its tech sector? And also, if you could add anything to what Pooja just said.
Thank you so much, Christine, for the questions. And I would also want to thank Pooja for such a comprehensive overview of regulatory sandboxes. So maybe how I'm going to answer this question is going to be a bit unconventional, because I'm going to start by way of a case study or example of what could actually go wrong if there are no regulatory sandboxes for financial services, financial technology services or products. And I'm going to use an example of my home country, which is Zimbabwe, and what happened. So there was a time when we had the whole cash crisis and cash flow issues. And then we had one of the biggest telecom companies in the country, which is private owned, coming up with a fintech solution, which is more along the lines of the payment systems. So we then had the mobile money application developed, which is called EcoCash, and it was linked to the banking sector and all these other things. So it was a solution that was coming in to address a need, which was very urgent in the country because there was no cash flow. But what then happened was there was no regulation of any sort. The product that had entered the market, or the service that had entered the market, was not something that was within the purview of the Financial Regulations Authority in the country. There were no guidelines. There was nothing of any sort that could have regulated how business was conducted. And as a result, you realize that years later, we start feeling the ripple effects of those actions, because number one, there is now monopoly in the market. There are a lot of mobile money solutions that are trying to be introduced into the market, but it's not possible because Econet already has got dominance within the market. And we also realize that trying to regulate it now is becoming so much of a challenge that you have instances where sometimes the regulator decides to revoke the license, and then they go to the high court, they have an injunction, and it becomes a very messy legal battle. We also have instances where there is not adequate consumer protection within the country, because Econet has monopoly, and it surely does whatever that it decides to. And we all know that where competition laws are not so clear, or where there is not so much of clear competition within the market, the effects are then felt by the consumers. So I decided to start with that case study because in my mind, I was thinking it would probably give us the other side of not having regulatory sandboxes, especially for fintech, because of the ever-changing innovations that are introduced. And maybe to come back to try and talk about why they are important from a positive side or a positive perspective, you realize that they are important specifically because they protect consumers. So it's also like it's one of the main objectives of a financial regulator to ensure that consumers are protected within the market. Products that are being introduced are not in any way adversely affecting consumers. And because no one can really foretell innovation and all these other issues within the financial services sector, it becomes very important to have a regulatory sandbox where the regulator can actually closely monitor the development of a fintech product or service to make sure that whatever outcome is not adverse to the consumer, right? So it also is very important in the sense that it actually informs regulators and keep them up to date with innovative solutions. And just as how Pooja has said earlier, that it then becomes easier for them to give up what is probably called an evidence-based approach to regulation. I think I liked Pooja's statement so much when he said that regulators are not IT experts. They are not, computer science geeks. So as a result, if then there is no regulatory sandbox, it becomes difficult for them to actually come up with regulation or guidelines or policy frameworks that actually work not only for the consumer but also for the innovative companies, because the whole concept is to try and come up with solutions that are favorable both to the consumer and also to the company without really stifling innovation, growth, or development. If you try to look at some of the examples that have been on the continent, right? I'll give an example of Mozambique. So you realize that in Mozambique, fintech development generally is in its infancy, but you realize that they do have a framework for regulatory sandboxes, even though they don't have what I would say a large concentrate of fintech firms or solutions within the country. And that has actually helped them, especially when we look at trying to regulate foreign owned entities that are bringing in financial inclusion solutions within the country. And the best example would be the case of Mukuru, which is actually a South African owned company or entity that tries to offer solutions for cross-border remittances through mobile money solutions. When they tried to enter into the new market in Mozambique had to actually go back to the drawing board and sit down and come up with a regulatory framework to ensure that there is a sandbox for this for this product, so that it actually, how can I put it? It actually contributes to more financial inclusion within the country, regardless of the fact that this is an entity that is not based in or that is not locally owned. So I would say that from that example, you'd realize that it also then helps with remittances, which is one of the issues, especially when we look at, I would say maybe the Southern African perspective, where you have got a high concentrate of people moving in across borders to look for greener pastures, which then also then talks about, how that contributes to GDP, which is obviously a different conversation altogether. And also, I think regulatory sandboxes become very important in Africa in the sense that they encourage innovation, simply because they create a platform for firms to be innovative without the whole concept of cumbersome regulations or burdensome regulations. And if there's something that we are well known for as Africans in most African countries, is to have cumbersome regulations that not only stifle growth or development but even innovation. So it then becomes a platform up at which firms can be innovative with so much freedom from the regulatory perspective.
Thanks for those observations. Very good observations and examples, what you say. And I agree. I mean, it's important, like from a Kenyan perspective, for instance, I'm sure like maybe a majority of you have heard of M-Pesa, which to begin with, what happened was the M-Pesa transaction innovation started at a point where there were no regulations. No one had ever known how mobile money should be regulated, how it should work. What is it? Should you receive, because you're receiving deposits from the public, who is receiving them? Where is the money once it's converted to virtual money being? It took quite a while to get the regulations and also for people to buy in. into this and trust it. So Pooja, if I could go maybe ask you a couple of more questions. First of all, what should be the objective of a regulator within Africa who wants to establish a sandbox? Like, what is it that they should be looking for the sandbox to do? And then also, which kind of regulations could be included in the sandbox? So, by regulations, I mean there's a lot of regulations, and Chido has referred to some of them. First, there's cross-border trade. So, within the Africa Continental Free Trade Area, you would expect, just as Mukuru was trying to go into Mozambique, that's essentially, it's trading services, but essentially that's what we're looking to have in the long run. So this in the sandbox, should they include foreign businesses as well? Should they include regulations like tax regulations? So that now you say you can also test tax regulations, and what kind of regulations should be included in addition to what would be the obvious, like if it's within the finance sector, like the regulation of the financial services. So if you could speak to those 2 points and also comment briefly on whether regulatory sandboxes should be how Africa goes, like it should be a very common place to know that there is a sandbox. If I'm an innovator who wants to go into Rwanda, it should be something so common that regulators are offering this across Africa, and innovators are aware that if I want to go set up in the Gambia, for instance, then I should be aware that there's a sandbox that I'll be welcome to do the testing at. Pooja?
Okay, thank you so much, Christine, for that question. I think in the course of maybe answering to the question or responding to the question, I would be leaning on some of the things that have already been said. So more or less, I think in all, the question borders on what should be taken into consideration in developing a legal framework for regulatory sandboxes. So what should be considered by African countries in coming up with the framework? So again, I think I should start by saying that the idea of coming up with regulatory sandboxes is not something that was developed within the continent. We actually borrowed the idea, and we borrowed the idea from the United Kingdom. And in borrowing that idea, right, we are not holistic in borrowing the idea. And why do I say that? So in developing a regulatory framework for fintech, right, it cannot be done in isolation of the model of financial regulation that you have in place. More or less, what would then happen is you might have a situation where you have a framework, but the framework is inadequate. So why do I say that? There are different models of financial regulation. 4 of them are dominant. So in the United Kingdom, what they currently adopt is what they call the Twin Peaks model. That is also what is currently in practice in South Africa. So under the Twin Peaks model, you have only 2 core regulators. You have a prudential regulator, then you have a conduct of business regulator. And these 2 core regulators, right, they have regulatory oversight over all sub-segments of the financial industry. So the Financial Conduct Authority that issued the regulatory sandbox of the UK in 2014, which every other part of the world has started following, they have regulatory oversight over banking, insurance, capital market, and then also pension. So it means that the regulatory framework that they issued has an all-round effect on all segments of the financial industry. But unfortunately, no, let me not say unfortunately, because that would seem as though I'm trying to criticize the model of financial regulation in Africa. But in most African countries, including the likes of Nigeria and Kenya, right, what we adopt is called, it's even a bit demeaning, but what is called is the traditional approach to financial services regulation. It's called the silos model, the institutional model, or sectoral model of financial regulation. So what that model entails is that every segment of the financial industry will have its own separate financial regulator. So let me use Kenya. In the case of Kenya, you have the Central Bank of Kenya, right, that deals with banks and other non-banking financial institutions. You have the Capital Markets Authority of Kenya that deals with the capital markets. Then you now also have the insurance regulator, and you also have SACCO that deals with savings and cooperatives and all of that. In Nigeria, you have the Central Bank of Nigeria, you have the Securities and Exchange Commission that deals with securities, you have the insurance regulator, and you also have the PENCOM, the pension regulator. So what am I saying? Our financial regulatory model is segmented. So let me now start speaking to the flaws in the regulatory frameworks we have. In the case of Kenya, right? I said Kenya has a regulatory sandbox, but Kenya's regulatory, their framework for the regulatory sandbox was issued by Kenya's Capital Markets Authority, the CMA, and it covers specifically only capital market activities. So it means it's fintech solutions that border on the capital markets. What then that means is that you have other subsegments of the financial industry that are not covered. But fintech is a systemic phenomenon. What does that mean? It means it runs through the entire gamut of the financial industry. So you also have fintech in the banking segment, you have fintech in the insurance and penco. In Nigeria's case, our regulatory sandbox framework was issued by the central bank. Ours is even more cut down in the sense that it applies to only financial payment system. But fintech is much more than that. So what then happens to, does it then mean that our Securities Commission should come up with their own regulatory sandbox? Does it also mean that the pension administration, so regulators should come up with their own regulatory sandbox? So that is the starting point. So the starting point is to look at the model of financial regulation. So again, that's just to say this is how we've copied it, but there are inadequacies in how we've copied the idea of it. So it means some countries in Africa have regulatory sandboxes, but by the very nature of the framework, it's inadequate to cover the entire financial services industry. So what I've spoken to now is the issuing authority. So apart from the issuing authority for regulatory sandbox framework, there are also other considerations. So one is another consideration is the eligibility of what is being tested, right? So again, most of the frameworks will tell you, Kenya's framework tells you that what is eligible to be tested is a solution, a process, a business model that is not covered by existing framework. But that in itself is not a perfect identification, or is not a perfect categorization. Why? So what if the dog test applies? So it is covered by existing framework, but it is not adequately covered by existing framework. In Nigeria's case, right, the eligibility of what to be tested is not defined in terms of being covered by existing framework. It is defined in terms of meeting certain objectives. It must be efficient, it must drive financial inclusion. So more or less, I'm saying that the eligibility criteria that has been specified in these frameworks are inadequate. So let's do a bit of an interdisciplinary approach to explaining it. So for patents now, right, for something to qualify or to be eligible for patent registration, they'll tell you it must be new. But the good thing about your patent framework is that it will tell you the conditions that something must meet before it can be said to be new or novel. But in the case of our regulatory, will I say, sandbox frameworks, what they typically do is to tell you that the innovation itself must be new. But they don't go further to break it down to tell you these are the elements that you must meet for it to be new. The idea of the elements that should be met for it to be new are a bit very, very vague. So that also needs to be looked into. The other third arm of what should be considered in setting up the framework is also who can be an eligible applicant. So, and that brings me to, I think, part of the points that was raised by Christine, which is, should it be exclusive to local companies, or should it also be open to countries outside of, let's say, Africa, so to say? So I'll just be using Kenya and Nigeria, because again, these are like the two biggest, part of the biggest fintech markets in Nigeria, in Africa actually. Kenya and South Africa is also there, Egypt is also there, but these four countries make up like the biggest players when it comes to fintech investment. So let me just be using the Kenya and Nigerian framework to kind of show the inadequacies of the framework. So Kenya's framework is, I don't want to say smarter. Kenya's framework is more, will I say, it's broader. It covers more applicants. So it covers both companies that are already operating in Kenya. It also covers companies that have been, will I say, licensed by other securities market regulators in other jurisdictions. And then it also then covers companies that would actually have a license after their test is successful. But Nigeria's framework is a bit restrictive. It applies to CBN licensed, like entities that are licensed by the central bank, and then local companies. So what then comes to someone's mind is, does it then mean if a foreign company, and we know how very digital our world has grown, we know how globalized we are. So you have some certain entities that would want to test the water before they actually enter your market. So what then happens to those companies? So it means you've shut them out. And then there is still a certain level of local content that we are seeing in some frameworks. In that regard, we can make reference to the framework in Sierra Leone. So the framework in Sierra Leone, what I read though, I don't know, I didn't get to actually see a copy of the framework, but the overview that have been written on it, what I read was that, what I saw is that for you to actually be an eligible applicant, you must meet two conditions. One is your company must be registered or incorporated in Sierra Leone. And then secondly, the company in question, 10% ownership of the shares in that company must be owned by a Sierra Leonean. So again, you're already bringing in local content into it. So are we being protectionist even in our approach to regulatory sandboxes? So that's another issue. So for now, I think I've dealt with three issues: the issuing institution, the eligible, what is being tested, eligibility criteria for what is being tested. I've also spoken about the eligibility to be an applicant. And then there is also the issue of safeguards. So again, you understand how regulatory sandboxes work is that you're entering the market but not fully into the market. So it means to some extent, people would actually access the services, people would access the products, right? But it's just that it's been tested. So it means that in that instance, there is a need to manage the risk that would flow from you actually providing that service or product in the interim, maybe like an approval in principle, so to say. So there is need to ensure that you have adequate safeguards or measures to attend to or cater to issues such as maybe data protection, anti-money laundering, and all of that. So definitely your framework needs to have safeguards. And then last but not the least, your framework also needs to speak to what would happen after the test. So there is usually one of three things that could happen. One is you could now get like an approval to go further with what has been tested. It can be the case that you'll be denied. It can also be the case that you'll be approved with certain qualifications and here and there. And then ultimately, I think the outcome of it might be if existing regulation do not attend to that particular solution or model or whatever, what would then happen is the regulator might now issue evidence-based or informed-based regulation to cover it. So I've bundled up everything, but I hope that we got the key points in terms of these are the considerations of coming up with the framework. The frameworks that we have already in the continent, we have some certain inadequacies in those frameworks. And then also, will I say, going back to what I said initially, is the fact that you have the frameworks being issued by just one arm or one financial regulator. So that is a problem. Apart from that, in terms of other regulatory stakeholders, in Nigeria's case, I expect that our regulatory framework should have typically co-opted other regulatory stakeholders that are very relevant to discussions on digital service or fintech. So you should have the framework saying that an assessment of the outcome of the test should typically capture other stakeholders, such as maybe the telecom regulator, the data protection regulator, the anti-money laundering, again, will I say officers and all of that. So it needs to be robust to cover every aspect of fintech, because again, fintech is not just a transactional phenomenon as we are looking at it. It's actually a systemic phenomenon. So yes, that's what I would say in terms of the considerations and then the inadequacy and then how we can move forward. And it's not just about Nigeria, it's actually also, so when you also look at the framework for Kenya, it also has those inadequacies in terms of the only regulator that was clearly mentioned or spelled out there is the Capital Market Authority. So, but again, does the Capital Market Authority have full understanding of data protection implications of a particular solution or product? So those are the issues that should come up. So it means our idea of financial services regulation is actually outdated. So we need to have a financial services regulatory regime that takes into consideration all key regulatory stakeholders of the financial industry as it stands. Yeah, I think I even missed to mention this. Nigeria's framework also says has a long arm provision. And by long arm, I means it says that the eligible, will I say, applicants can also be telecom operators. So that is a case of the financial regulator, the CBN, stretching its hand into an area that is within the competence of another regulator, that's the telecommunications regulator. So we have those issues. So again, there is a need to rethink generally. I think that would be my closing remarks. There is a need to rethink the framework for regulatory sandboxes in Africa. Thank you, Christine.
Pooja, thank you so much. And I agree with what you're saying, especially because what you highlight, like for Kenya, there's like the Communication Authority of Kenya, who is in charge of the telecom, the data protection, and all that kind of thing. So you'd imagine that all these people come to the table and actually come up with one very comprehensive document that deals with all these issues. And being Africa, it's very tricky for someone who is starting up because, again, of the uncertainty of the regulations. Because one day, the Capital Markets Authority of Kenya will give the regulations, and then the central bank will revoke them. It's quite the situation. But Chido, if you could give your closing remarks and add on to the discussion, because we are a few minutes past the time that we are hoping to end.
Okay, I'll try to make this as brief as possible because I think Pooja has really said much. So I do. Firstly, I need to associate myself with Pooja's thinking, especially when he does this comparative analysis of the model that we adopted from the UK is and how that does not fit well into the African context, mainly because of how we do our financial regulations generally. And I would probably want to give a flip side of the story. If you look at the South African perspective, yes, currently they do not have a regulatory sandbox for fintech firms, which is quite very alarming, especially given the fact that there are a lot of fintech startups in South Africa. But that's not the subject of discussion today. But I wanted to talk about their mode of regulation. They use what is known as the Twin Peaks model, which is also more or less like the one that they use, in the UK and in Australia. So the whole concept of a Twin Peaks model really says that, there are two different regulators: the one that regulates market conduct and the other that regulates, all the deposit taking institutions. Not getting into the whole details and boring people with that. The good thing about that is there are not very many regulators that need to develop regulatory sandboxes for fintech products or services. So currently, they actually do have a bill that has been tabled in Parliament, which is the Conduct of Financial Institutions bill, which is also known as the coffee bill. So what basically the bill tries to do is, because it's mainly speaking to the regulation of market conduct, specifically for all financial service providers within the country. They now also try to put in what I would say specific provisions that relate to the regulation of fintech also. The effectiveness, or whether they are actually comprehensive in, the provisions themselves, that's another discussion. But I feel like having a system like that makes it even easier to try and come up with these regulatory sandboxes, and maybe to try and bring in another thought altogether is this concept that if you look at the frameworks that are currently within the continent, you realize that they have got guidelines that are issued that pretty much dictate who has to be who applies, and whether when they apply they are accepted or not, the whole application criteria. And in Sierra Leone, you realize that you cannot apply for or to be part of a regulatory sandbox if the company is completely foreign owned. So according to their regulation, according to their guidelines, a company has to be within the shareholding of the company, the startup firm or whatever that is. There has to be at least 10% shareholding that is owned by a Sierra Leone citizen. So which basically means that if the whole Mukuru incident was happening in Sierra Leone, it was not going to be possible for Mukuru to be part of the regulatory sandbox. And I think the problem that I have with some of the objectives or the lists or the list of requirements that are there in some countries. I mean, it comes from the fear that I have as an African and how I sort of observe the way we do business in Africa. And in a way, that might end up creating more or less like an uneven footing for most fintech firms. Because my thinking is, if I do not meet the certain criteria that has been listed, it basically means that all these advantages that we have been listing or talking about academically or theoretically that accrue from regulatory sandboxes, I won't be able to enjoy them. And the question also becomes, how fair are the procedures for trying to identify who has to be part of a regulatory sandbox or not? And another thing, in some cases, more giving an example of Mauritius, you realize that they had no regulatory sandbox for peer-to-peer lending startups. And what then happened was this company decided that they wanted to get into the market and there was need for a regulatory sandbox. And then they themselves, together with the regulatory authority, decided to sit down and come up with a regulatory with the guidelines for regulatory sandbox, which has been, and you'd realize that if you look at the guidelines that are there, the peer-to-peer lending ones are the most developed because they keep being updated, mainly because of the influence that this company does have. And I fear that if we start like that as African countries, it becomes very problematic, because again, it comes back to this whole idea of how we do business in the continent. There is not so much of transparency. There are a lot of bureaucracies and issues that we cannot begin to unpick now. So I feel like we need to do better if we're going to be having regulatory sandboxes. Yes, they are good, but at the same time, we just don't necessarily have to adopt the whole the whole framework as it was developed in the UK. But we also then have to try and tailor make it to make sure that it suits the different needs within the country, but not in a way that makes it ineffective. By that I mean, if we look at the case where the Ghanaian case, you realize that it's not comprehensive enough. It is specifically going to be trying to address issues of KYC, blockchain-based solutions, and things like that. So which basically means that in as much as they've tried to adopt and suit the needs, it becomes it's more or less like a miniskirt approach, which I feel like becomes highly ineffective. So yes, my closing remarks would be, yes, regulatory sandboxes are very important and we do need them as a continent or as African countries, but we need to make sure that we first address the inherent challenges that are already existing within our financial regulatory authorities before we try to put others. Because like somebody once said that, technological based solutions are not really a solution to deal with the inherent challenges that we have within our structures. So before we try to come up with sandboxes, we need to actually address those underlying issues to make sure that we update our regulatory structures, move from the traditional approach to what actually is working now. And then on top of that, have regulatory sandboxes, because as it stands right now, most of them can be argued to be highly ineffective because they are just, miniskirt approaches, as I have said, to making an end to a means that's there. So yeah, that would be from me, Christian. Thank you.
Okay, Chido, thank you very much for your insights and thoughts on this. And thank you, everyone who has been listening in. I hope you've learned something from this discussion. I hope it was informative or gave some thought on this whole idea of testing of regulations across Africa. We will invite you for the next discussions that we'll be having, possibly follow-up discussions, because I think we just barely touched the surface on this topic.